Hey guys, it's your boy Cryptomaniac, and today we will be talking about volatility, trading volatility, and you can do that by trading move contracts on FTX. I'm only trading daily move contracts, so we have here the different types. We have the daily contracts, the weekly, and the quarterly. But we'll be sticking to the daily only because that's the only one I trade. So for example, we have the 28th of March. So today we have the move contract of like BTC move of the month and the date. So yeah, that's the daily contract for today. And so what's the move contract? Is how much BTC moves within one day, so meaning from daily open to daily close. At the end, it's the difference between the daily open and the current price. That's the only thing that matters. Also to note, the direction on the play doesn't matter. So the only thing that matters is how much the price will move, or at what price it will be like ranging. For if you expect a big move, you're going to be long, and if you expect the price to stay in a range, you are going to be short BTC move contract. So for example, on the 26th, it was the Saturday, the strike price of BTC was 44.3 and the daily close was 44.5. So the price difference between the daily open and the daily close was about $200. So the move contract will have expired with 200 at the end, in theory, because we have the extrinsic and intrinsic value, meaning sometimes the price will be lower because of time decay. At the open of the BTC move contract, price of intrinsic value is always 0 because price hasn't moved at all, and the price of the extrinsic value is higher. So for example, let us say at the beginning of the move contract of 26th of March, the extrinsic value could have been $800, and the intrinsic value could have been was 0 at strike price because price hasn't moved, and your value would have been 800. And if BTC decides to close at the same price as it has opened, you would see that the BTC move contract goes to 0 because of time value. The extrinsic value reduces with time, and at the end, with the expiration of the contract, the extrinsic value will be 0, and the only thing that is left is the intrinsic value. So how much has BTC moved between the daily open and the daily close? So what have we learned now? Extrinsic value, time decay over time, so it starts at some value, for example $800, and with time it's going down, and at the end of the expiration of the daily move contract, extrinsic value will be 0, and what will be left is only the intrinsic value. So time value is declining as the traders or investors have less time to trade with the move contract. So to give you a better overview about extrinsic and intrinsic value, intrinsic value is as said, is the difference between daily open, daily close. So if we have a open at let's say at 45k, that's our daily open, and our daily close is at 46k. Our intrinsic value is 1k. At the end of the daily move contract expiration, the move contract will be worth 1k because the extrinsic value has gone down because of time decay. So at the end of the expiration, it's worth 0. So now the question is when to long a move contract and when to short a move contract. So you want to long when we leave a balance and create an imbalance. For example of that is breaking out of a range. So we have like got this range here. So breaking of this balance area and creating an imbalance, this could have been an exactly, but like the thing to note is I don't like to long move contracts above strike price because of the time decay. It's not a win-win situation, and if you don't break out or create an imbalance, you will in the end lose because of time decay going down. So regarding longs, I try to long move contracts during news events because you get a lot of volatility, and if we have been in a balance, it's like a good chance to long a move contract because the possibility of a break and creating an imbalance is higher. So regarding shorts, so when do you want to short a move contract is when we got an imbalance. I'm gonna give you an example. For example, here you got a nice imbalance on the first day, and the thing is that we tend to create a balance value area. So we got a nice range here, and the first instinct or what has been proven in the last few months that going into the weekend, this was Friday, this was Saturday, we try to range. So this was you go our area for a short, we balance, created a nice value area, and we had a nice, as you can see, price didn't move much, and I think I can show it to you on the move contract as well. Like the move contract itself went down 88% because of price hasn't moved much, and time decay is what going down exactly. The time value, the extrinsic value is going down, and at the end of the move contract it's going to be worth 0. The only thing that's left is the intrinsic value, and at the end we got like $100 price difference between the strike price and the daily close. So another trade for going short on move contract is when you get a nice up move, but also expect a pullback again. So what I mean is, for example, you got BTC something like this. This is your strike price, and during the day the price goes up, you reach resistance, and also think that price is going to retest lower levels again. So that's your bet when to go short again, because first of things, you know that time decay price will of the move contract will go down, and you also expect price to reach near strike price again. So that's also a way to go short on the BTC move contract. Also, one more last thing to mention is margin, because a lot of people don't know regarding margin on BTC move contract. So one BTC move contract is one BTC. So if the strike price is 47k, one BTC move contract is also worth 47k. So if you long with 10x at 47k and go long on BTC move contract, you will need to have 4.7k margin in order to long one whole BTC move contract. So it's the same as going long or short BTC, but with no direction. So you don't care if it's going up 1k or if it's going down 1k from strike price now, because in the end you only want BTC to move 1k if you're long. That's the, if you know BTC is going to move 1k, you're going to long BTC-Move-Contract, and you don't have to worry about direction. Also regarding fees and liquidation, it's the same when trading BTC. So if BTC trading fees at, I don't know, 0.02%, it's the same for the move contract times your leverage. So I think that's it, and if you have any questions left, let me know in the comments. Thanks.